Welcome, everybody. Welcome to this week, and what a week it has been. Holy banana bread. It's good to be back again this weekend. Hopefully, you guys are all having a great weekend. I know, at least here in Ottawa, we've been getting some rain showers today. They've been sort of coming in, sneaking in every so often, but that's the nature of weather. All right, so today we got quite a show for you. We got quite a bunch of different things. We're going to talk, of course, a little bit about CPI. We got the Canadian CPI numbers that came out. We also got some retail sales numbers that came out. So we're going to talk on those as well. Some stuff going on in China. We also got some interesting news coming out of Russia. And it's probably not what you think. It's actually not about the war, believe it or not. In addition to that, we've got some news about technology. We got news about layoffs. We got news about everything. That's just the nature of news this time around. And I welcome to the show, Jill, and welcome, Bleak. It is fantastic to see you. All right, so we're going to start right away. We're not going to waste any time. We're just going to jump right into the Canadian CPI. So the Canadian CPI numbers have come out, and we're looking at for July, 7.6% is the CPI. Previous month, it was 8.1. So initially, when you look at that, you might think, okay, so we have peaked. 7.6 is good. We're on the way down. But here's the problem. With the gas prices, which have been coming down, that actually may be what's contributing to that 7.6, and maybe the gas more than anything else. In the month of July, gas prices fell 9%. So I think that's probably, considering gas is used to transport everything, I think that's probably the biggest contributor to the drop in our CPI. Interesting thing is, if you look at only groceries actually rose in July. To 9.9. They were at 9 point. The inflation rate was 9.4 in June, and it rose up to 9.9. So groceries are still going up. So, and I put a poll out today as well over on the site, basically saying, hey, have we peaked yet for inflation? So you guys, if you get a chance, just do a vote on that. That would be kind of fantastic to see. And we got a couple more people who have staggered in. So we got the friggin' Oracle in the house. Hola to you as well. And R Sapper. Hi, R Sapper. Nice to have you here at the live stream. All right. So that was sort of the whole thing with the CPI. Now, I don't know what you guys are thinking. I don't think that I actually think that we're more of almost like moving sideways now at this point. So it's hard to say whether or not we're going to come down. Now, here's the thing. The Bank of Canada is meeting on the 7th of September. And because we came down a little bit, we're probably not going to see another 100 basis point hike, but we probably will see a 75 basis point because they still want to get that number down, between 2 and 3%. So we do have a little ways to get there, and it'll be very interesting to see. Now, on the Fed side, on the U.S., they're meeting, I believe it's what is the date? I don't know what date they're meeting, but I do know their CPI is coming out. I believe it's September 13th. So we will, they'll have 2 pieces of data to make their decision. We'll see what the rate hike is going to be down there as well. All right. I mentioned as well about layoffs. So layoffs are kind of one of these things, like when we're thinking about whether or not we're moving into a recession, one of the biggest factors to that is, of course, the job market. Now, I dropped a video on Saturday just about jobs and about some of the issues that we're having with the fact that, the jobs haven't gone down. Now, we are starting to see layoffs, and that may be painting us towards a recession. So a couple of big names down in the U.S., Best Buy, they have announced that they're doing, they didn't say exactly how many, but they said they're doing hundreds of layoffs. So that's maybe a lot. It may not be. HBO Max is in the States. They're laying off 14% of their workforce. Interestingly enough, HBO Max is going to be merging with Discovery Plus later this year, making up their own, I don't know, their own new streaming service. There's a lot of streaming services out there. If you want to subscribe to all of them, you're pretty much looking, it's as big as an old cable bill. So they add up pretty big time. And Jordan's in the house. Hey, Jordan, welcome to the stream. Now, Apple is also doing some layoffs. They're laying off 100 of their recruiters because they say they really don't need them now. And that makes sense. What we're seeing in tech, and this is one of the things that we have to be careful of. When you look at tech, you see all of these layoffs, but the big thing is a lot of these companies overhired during the pandemic when everybody was flushed with money and buying like crazy. You take Amazon, for example. Amazon could barely keep up with their orders during the pandemic when everybody was sitting at home, nothing to do except for order on Amazon. And plus, they were flush with money because of all of the governmental supports. So Amazon overhired. And so when companies like Amazon start laying off now, it isn't really a reflection on the economy. It's the reflection that we're getting back to normal and they no longer need all of that staff. But what we're doing is when we filter that out of the system, we're seeing that hiring is grinding down to a near standstill. So we are seeing a little bit of job action, but we got a long ways to go yet when it comes to the job action. And I see Bonnie is in the house. Hello, Bonnie. I'm doing fine this fine Sunday afternoon. So that's a little bit about layoffs. Now, I did want to talk about China. China's kind of interesting. So China right now, they are the world's second largest economy. And that's one of the reasons why China should matter to us. So what they're doing is they're actually cutting rates instead of raising rates because they're trying to stimulate their economy. Like right now, they've got one massive crisis, which is their property crisis. So that all began with Evergrande and a lot of the mess that they have. But now they've got about 4 or 5 big companies in China, real estate companies, that have been accepting money, but now they can't actually build anything. So we've got this massive issue. And the thing about China is in China, it's ingrained within the Chinese culture that it's very important home ownership. So people are striving to own homes. To them, that's a really big thing. And now you've got all of these people who have paid for homes and they're not getting them and they're trying to pull their money out. So there's a lot of different things that are happening over there. Another reflection of the Chinese economy is when you look at younger people, right now their youth unemployment rate is high. It's at 19.9%, which is massive. So they do have issues over there. Now, in addition to that, and speaking of supply chains coming out of China, China has actually started shutting down some of their factories. And the reason they're doing that is because of the high demand for AC. They're currently in the grips of the worst heat wave they've seen in 60 years. So they've been basically, I don't know if we want to call them brownouts, but they have been forcing different factories to shut down to try to take all of that extra pressure off of the power grid so that it doesn't completely collapse on them. So that's going to be kind of interesting. While we're in China, one last little story I have. So Chinese tech companies, we're talking companies like Alibaba, Tencent, ByteDance. Well, the Cyberspace Administration of China is forcing these companies to give them basically all the information on their algorithms. So that's just, to me, I found that odd that they're looking at that. And I know most of their algorithms are basically based around being able to track people. So that's a very interesting request. I don't know what it means. Anybody have any theories? Feel free to drop them in chat for sure. All right, a little bit about the manufacturing sector. So Statistics Canada have released our Canadian manufacturing numbers, and our sales in July have actually fallen by 0.8%. Now, according to Statistics Canada, this drop was due to a lower demands for petroleum, wood, coal, and aeronautical equipment. So I didn't know we were a big supplier of aeronautical equipment, but apparently we have a little bit of that. Now, when it comes to Canadian retail sales, those numbers came out on Friday, and retail sales in Canada fell by 2% in July. Now, here's the thing. That's actually not a bad thing, because one of the goals with the rate hikes and the Bank of Canada is for people to be spending less. So if those rate hikes are working, we should be getting the Canadian retail numbers should be coming down a little bit. And that's what we are seeing. So perhaps that's a good sign that things are slowly working in that way. It's hard to say, though. Now, here's another interesting story that we have about Apple. Now, I don't know about you guys, but I find that there's way too many ads out there as it is. And Apple currently makes about $4 billion a year from their ads. But they have decided they want to beef up their ads. So they're looking to add ads to some of their apps. So like, for example, Apple Maps, I think the Apple Bookstore, for example, little things like that. So they are looking to do more integration with ads. So if you are an iPhone or an iPad user, you may be seeing a few more ads than what you've already see now. So just to sort of keep that into perspective. And just out of curiosity here, I don't know how many people. I think we got a few people here. Are you guys Apple users? Are you guys, or are you Samsung? I mean, when it comes to your phones, or maybe you're a Google, there's the Google phone. So just be curious to know what you guys are doing. Hey, Phil, nice to see you. So Apple, Google, or Samsung, or maybe you're a Huawei. I'm not entirely sure, or a Huawei, however you say that phone. Actually, that phone, I don't even think you can get it anymore. So Phil's an Apple, and I'm an Apple. I've got an iPhone, so it's kind of neat to see what you guys are. Now, Apple is supposed to be announcing their next iPhone pretty darn soon. I don't know the exact date of it. I didn't write that down. But normally in September is when you get the new iPhone launches. So that will be very interesting. Jungle Eddie is still using a flip phone. Holy banana bread. I haven't seen one of those in a while. And then R Sapper has a Samsung. Very cool. Very cool. Now, it's funny. I've been using an iPhone for so long that if somebody hands me their Samsung and says, hey, can you find something for me on it? I'm like, no, I don't think I can. Jordan is Android, but not Samsung or Huawei. Or Google, apparently. So Jordan has something different. I don't know, Jordan. I don't know, but that's cool. All right, a little bit about critical elements. So the U.S. recently passed a bill, and it's their U.S. climate bill. So what they want to do, and one of the goals of their bill, is they want to get off of Chinese critical elements. So those are your elements used for making circuits, cars, things like that. Ulay that's what Jordan has. Okay. I've never heard of Ulay. I'll have to look at that after the stream just to see what that is, because that I just have never heard of it. Cool. All right, so U.S. climate bill. So what they want to do is they want to get off of China, off the Chinese critical elements. And here's the interesting thing about the bill. In the bill, they actually say we'll start using Canadian critical elements instead. So that's fantastic. That looks good for us. And they were talking about, I think, $500 million to be moved towards that. So some of that money might actually flow into Canada to try to get that going. Now, this is good for a couple of reasons. One, in our last federal budget, we basically allotted $3.8 billion over the next 8 years for our critical mineral industry. Now, our industry, I want to be very clear, our industry does require a lot of work. Like even our one lithium mine that we have in Canada right now is actually owned by the Chinese. So there's definitely a lot of work and infrastructure that needs to be put into place. But it looks like the stars are starting to align in that area. And now as investing, this is something to pay attention to, because once the US is starting to pull and use exclusively Canadian minerals, that's probably going to be a good investment opportunity. So keep your eyes open for that. So that is pretty darn cool. Now, we did have some earnings that came out this week. So Walmart actually, they beat their expectations. They did really well. They reported an 8% increase in their sales in Q2, which is absolutely amazing. But that's in their physical stores. When you actually go to online in e-commerce, Walmart did 12% extra. So they had a 12% rise in their e-commerce sales. That's amazing. But here's the downside to Walmart. They have reported that their inventory is up by 25.6%. So they are sitting on all of this inventory. That to me, though, and this could be a good thing, you're probably going to get some half-decent sales, especially as we move into the fall and towards the holidays. So watch some of their inventory. You may get some really good deals. So that is kind of cool. Freaking Oracle says, I have Samsung and Huawei. RSAPper, they're calling it the Inflation Reduction Act. There we go. Bring that up. Yeah, the good old Reduction Inflation Act. And we talked a little bit about the full act, but I was just looking at that one piece, which I think was relevant, at least to the Canadian story at the moment. So that was Walmart. That was our good old friend Walmart. Home Depot also beat their expectations. They reported an increase in their sales by about 5.8%. Now, not every store did well. One store in the retail sector had a dismal earnings report, and that was Target. Target absolutely missed their expectations. In fact, their profits dropped by 90% in Q2. So that's pretty big. Now, they're not worried. They said they figure it's going to rebound, and they also believe that part of the reason is that there was just so much money coming in last year that they took in a lot more than they normally would. So that 90% drop in profits is perhaps not as big as it actually looks. Now, speaking of retail, have you guys heard about Zellers coming back? And here's my question for you guys right now. How many of you are actually old enough to have been in a Zellers? And how many of you of those who have had one of them Club Z cards? Do you remember the Club Z card? I honestly think that the Club Z card was probably one of the first points collectors that we ever had. But that's kind of cool. So here's the thing about the Zellers. So they're not going to have their own stores the way they used to. They're going to basically be within specific Hudson Bay stores. So they'll have them in the, well, I don't know if they'll put them in the back or how they're going to do them, but they are going to have an online presence. And part of the reason, of course, is the nostalgia. Well, at least that's the reason that people may come back. But the other big reason too is the Hudson Bay Company, when they got rid of Zellers, because Zellers was pretty much their discount retail line, because Hudson's Bay tend to be a bit more upper class. I'm going to say upper priced. So what they did is when they got rid of Zellers, because they wanted to bring Target in, and they brought Target in, and Target didn't do so well in Canada. They sort of like how they missed expectations back in the earnings part. Well, they definitely missed expectations in Canada, and that just completely failed. But now with a slowing economic situation, so with our economy in slowdown mode, this is the perfect time to bring Zellers back for the Hudson's Bay Company. It's their way to get back into that retail, the discount retail sector, which is going to be more popular than ever because, when the economy is in a slowdown, people don't want to be going out and buying all the high end stuff. They want to try to keep things as cheap as possible. And I can see that being a big thing. So it's really, really interesting. Now, the friggin' Oracle. Well, before we get that, let's see here. Jordan says, I can't wait. I've heard of that. Yeah, it's pretty cool. And Jordan also said, I still have my Club Z card somewhere. I do not know if I still have a Club Z card. If I do, it's because I kept it for nostalgia reason, but I may not. And the freaking Oracle says my mom worked in the Zeller's restaurant for years and years. Yeah, that Zeller's restaurant. They used to have, was it the chicken sandwich that was really popular? You might know there, Ken. But yeah, they had I remember the little Zeller's restaurant. See, I used to love Zeller's because, as a kid, Zeller's had they had a whole bunch of toy aisles and there's all kinds of fun stuff just to roam around in Zeller's. And plus there was a Zeller's that was close to where I lived. So that was always pretty darn cool. So that was Zeller's, Club Z. And it's actually funny. This is dating myself a little, but when the Zeller's card and Club Z came out, initially the way they ran the commercials for it, they didn't actually tell you what it was. And it was basically like people on a beach and somebody's like, oh, the best things in life are free. And then, you scroll back and there'd be a guy with a TV on his chest going, yeah, like this TV. And then it was like, they had the Z and we're like, what the hell is this? Nobody even realized that Z was for Zellers. So it was really, really, really kind of funny how they brought that about. And then once they came out, they became one of those ways you could just, collect the points and get some free items, which is, I don't think I ever got free items. I just collected the points. That's kind of the way it is. The only thing I've ever gotten free through points is through Air Miles back before they went and changed it. I've gotten a flight out of Air Miles. So that is pretty cool. Let's see. I tried explaining to Andrew yesterday. I was able to buy higher end when I was working, knowing my body was breaking down. I was storing these new inbox items for when the old one broke. Hoarding. All right, that makes sense. Well, it's one of those things. I mean, if you have an item that you're going to be using for a long time, and let's say it has a shelf life. When I say shelf life, like let's just say, you normally break it every 6 months. If you find a good deal on it, it actually makes sense to buy a few, if not more. And, if you've got the place that you can sort of hoard them without it being technically hoarding, because anything that saves you money over the long run is something that I think is fantastic because, well, I'm a financial minimalist, so I like saving money. Jungle Eddie says, I don't remember if I got taken to the Zellers or Woolco restaurant when I was a youngster. You never know. You probably have been to both. That would be my guess, if I had to guess. I think I had an aunt that actually worked at the Zellers restaurant, if I recall correctly. Yeah, but still, it was always cool. Anytime my mom would go there, us kids, we would just want to run into the store and look at the toys. That's just the way things went. All right. We got some Celsius news. Now, I know Celsius is kind of old news now, but there was a Quebec pension fund. They're called Giant Cass. I think I'm pronouncing their name right, or Case. Giant Case or Giant Cass. They had actually invested $150 million with Celsius. And they have now come out this week and they've said, well, we're pretty much writing that off. Now, they haven't ruled out trying to take some legal action against Celsius, but from the sounds of things, Celsius is run completely out of money anyway. So I think in this case, that pension fund is out of luck, which kind of sucks because what they were doing, I think, is the right move. Moving a small allocation into crypto for pension funds. That's one of the things that we want to see, because when we get a little amount in the US, when we get a little amount of regulation around Bitcoin, you're probably going to see some pension funds starting to move into it. That would be fantastic for Bitcoin and for crypto in overall as well, because normally what's good for Bitcoin tends to be a little bit okay for the altcoins too. So, but unfortunately in this case, they made that mistake of getting involved with Celsius, and they've been burned for it. But they're not, interestingly enough, they're not bitter on crypto at all, because they kind of recognize that sometimes if you're a trailblazer, which being one of the first pension funds to jump into stuff like this, it's the risk with being a trailblazer. Sometimes being a trailblazer works out really well and you get a great return on your investment. Sometimes not so much. All right. And Jordan, thank you very much at the friggin' Oracle show, and Natasha for the bread. That will get us through a couple of weeks. Oh, they brought you some bread. Bread is always good. Okay, so that was Celsius. Now we got, let's talk a little bit about a specific meme stock that was in the news this week. Bed Bath and Beyond. So anybody who's living under a rock this week, basically Wall Street Bets, our good buddies over there on the Reddit community, they have been pumping Bed Bath and Beyond this week. And oh yes, it absolutely went flying towards the moon. And to give you an idea, there was a kid down in the States who made $110 million trading this pump. Well, unfortunately, one of the bad, and this is the thing about meme stocks. Meme stocks never have happy endings. Maybe this one boy had a happy ending, but more people lost a lot more money, because what ended up happening is Ryan Cohn. Now, Ryan Cohn, he used to be involved with GameStop, and then he moved over and he started pumping. He basically started almost a pro campaign against Bed Bath and Beyond. Well, because of him and his popularity, that's one of the reasons Wall Street Bets got behind, and one of the reasons people were having a lot of faith in Bed Bath and Beyond. Well, as everything pumped, and we're talking massive pumpage, he then decided he's going to sell everything. So he actually sold 9.5 million shares to end the pump. And of course, when he did that, that immediately caused a 40% drop in the share price. So there's a lot of people, and over on Reddit, people have been posting some of their astronomical losses. I did see one person post a screenshot of their portfolio, and they were down like $70,000. And I was just like, holy banana bread. There's a reason I don't day trade in meme stocks, because you get burned. I have made money off of a meme stock before, but that's just because of coincidence. That was back in the early days of Weed MD, when they were pumping the weed stocks. I had some Weed MD, and I thought, okay, that's cool. We'll see if anything happens. Well, unfortunately not, until all of a sudden they got pumped. And I happened to be online when it happened. And I think I had bought in at like, I don't know, 30, 40 cents maybe. And they got pumped, and I watched as once it hit 92 cents, I was like, I'm out. I'm absolutely out. I sold everything, made a nice little profit. And then after I sold, I watched it fall back down. So I was just like, I can't believe it. I got out at exactly the right time. I probably could have made a tiny, tiny bit more if I gotten out about 30 minutes after when I got out, but I was happy with that. It's one of the things to do successful. If you guys are into day trading, I usually I usually don't recommend it because it takes, it's very, 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 very highly risky. Now, I do some day trading to make money. That is my main source of income at the moment. But here's my key to success. My key to success is I don't get greedy. Because when you get greedy, you get burnt. It's like I may buy $4,000 worth of a stock A, and it may go up $100, and I'll sell it at 4,100, and I'll take the $100 profit. I will do it, and then go find my next target. And some days there's just no good targets, so I just leave everything alone in those situations because And then there are days too that you find a really good target, you can get in quickly, and you can make almost $1,000, for like less than 15 minutes of work. But here's the thing: you can also, if you make bad choices, you can lose that same amount of money just as fast. You could even lose more. So it's kind of one of those things. Like, I have a fund. It's basically my day trading fund. So that's the money I use to play with. Like, I don't take things from all of my investments. I only have what's in that fund. And that fund that I use, it's just a $4,000 fund. I play with $4,000. I throw it on whatever I finish with at the end of the day. If I end up with 4,500, I take that 500 off, and that just that goes into either other investments or paying some bills. More usually it's paying bills. And then I'm left with $4,000 at the end of the day, and do it all again the next day. So just one of those things about day trading. Very, very risky. If you are an emotional type person when it comes to your trading, absolutely do not even attempt day trading, because you will get wrecked. And as it is, the 4,000 that I have set up for day trading, if I got completely wiped out of it, yeah, it would suck, but it wouldn't kill me. I would just, save up another 4,000, make a new nest egg. But I normally don't. I'm very, very, very successful, but I'm also very, very, very conservative. There's a lot of times I will pass up on trades that could be insanely profitable, only because the risk level is a bit higher than what I'm comfortable with. So anyway, once again, off on a tangent. But yes, that was a little bit about Bed Bath and Beyond. All right. Everybody loves what in the banana bread is going on with our good buddy Elon. We do have an Elon story this week. And here it is. So Elon, it's hilarious. So Elon made a tweet about buying Manchester United. It was obviously a joke. He even came out afterwards and said it was a joke because people were taking it seriously. People took his tweet so seriously that the stock price for Manchester United dove up 10%. So it went up 10% because of his tweet. News associations were getting a little confused. It caused a whole bunch of some news places had actually started to report it as though it was legit. And here's one of the things about Elon, and this is what I think people have to get. It's just because he tweets something, you need to look at the context of what's going on around that tweet. And if you sort of read the back tweets before it, you can very clearly tell he's not being serious. But obviously a lot of news places didn't. And a lot of people were like, oh my God, Elon is buying Manchester United. It's kind of weird because if Elon were to buy them, it probably would cost about $5 billion. So considering the situation he's in with Twitter, I can't even see why anybody would think that was even a possibility at this point. So that's kind of a no-brainer in my opinion. Okay, that was our Elon story for the week. We do have I got a little bit here on natural gas. So one of the interesting things right now is the world is crying out for natural gas. And we have oodles of natural gas in Canada. But we do have one problem. We don't have the ability to ship it out in great amounts. So our shipping is kind of limited between the pipelines that we do have and the liquefied natural gas ports that we currently have. Now, as a result of this, it's estimated that Canada has lost about $2 billion in profits that we could have had over the summer if we had at least enough outport ways to get our natural gas out of the country and onto the market. So that's kind of a shame. It's one of the reasons, like, I know the Maritimes, in Nova Scotia, they were talking about building a infrastructure for liquefied natural gas so they could export it to Europe. I think that would be a fantastic way. It would certainly be more money for us. And I know that some groups have been saying, well, even if we approved that right now and started building it, by the time it would be ready to be in use, the need's already going to be passed in Europe. But let's face it, as energy continues to evolve on the planet and as we use more and more fossil fuels, we're going to run out. There's going to be future oil crises. And to me, it makes sense to be ready for them opposed to not being ready for them. Now, let me ask you guys here. How many of you think we should have more oil, not more oil, but more oil export options? And how many of you think that we should be able to refine our own oil within Canada? Just out of curiosity. Like, I support both, but I know a lot of people don't. And that to me is cool as well. But just curious what you guys think on that. Now, as you guys are sort of perusing that or thinking about that, we also have, I have a Russia story, but I want to talk about the crypto story first. And so we have actually got a regulatory board in Canada has put an extra regulation on crypto. And look at this. RSAPper says refine. Yeah, we need our own refinery. Absolutely. Cool. Well, I like that answer, R. So what we're looking at right now with regulation is, so there's a group of people, it's called the Office of the Superintendent of Financial Services, so the OSFI. You probably have not heard of them. If you have, kudos, but they control some of the federally regulated financial institutions. So we're talking about things like banks, for example, would fall under their domain. And what they have said is they have now put a regulation in place where any federally regulated financial institution that wants to purchase more than a 1% allocation in crypto needs to notify them first. So the whole thought on this is that it will make things a little bit more stable because people can't go overboard with the crypto while these institutions can't go overboard. So it should create a little bit of stability and lower any amount of risk while we're waiting for crypto to eventually get better regulations, I think, worldwide. So regulated is one of those things that we're waiting to hear about. All right. Oh, hello, Trevor. How are you? It's good to see you. I have an unusual story up next. And here's the interesting part. This story ties right into Saturday's video, which is kind of funny. So in an odd way, but I'll put the pieces together here in a second. So here, first of all, this is a Russian story. So Russia is now offering women $16,800 if they can have 10 children and they can raise them. So they have to have 10 kids. They have to raise them all, and the kids have to live. So if they can raise successfully 10 kids, they will pay them this. Now, there's one exception. If one of the kids goes off to fight in the military and gets killed, that's okay. That child is counted as an A-OK child. So they're now willing to pay people to have 10 kids. And now, why are they doing this? That's one of those interesting stories. So what is happening is they're doing this in response to the baby boomer issue. The fact that they have a huge chunk of their population moving into old age, and they're leaving the workforce permanently. And, and some of them, of course, are also at that point that they're starting, the upper end of the boomers are starting to pass on. So as a response, Russia is looking at this, and they understand and they see the problem that's happening as people are leaving the workforce. They don't have the people to fill them. The spots that are being left, they're in that same situation that we're starting to run into here. So what they're trying to do is they're trying to create an incentive for everybody to have a lot of kids so that they got that group that can move in and fill some of these roles. Of course, it's going to take 20 years to get all those kids up to working age if this is something new, unless they backdate it. Like if you've already got 6 or 7 kids, just have 3 more and then you'd be fine. But that's the incentive that they're trying to do. They're putting an incentive out for people to have more kids so that they can basically backfill all of the jobs that are going to be left as the boomers pass through the system. So I think that's really funny because if any of you guys who watched Saturday's video, one of the things I was talking about with the job crisis is the fact that we have a bigger issue when it comes to the boomers leaving the workforce. And the pandemic, when it came along, the pandemic basically gave incentive for people to retire early. Like a lot of boomers who are, above 55 and who had the financial ability retired. They're not going back to the workforce. So we're looking and people are like, oh my God, why are there so many vacant jobs? Well, that's a big part of it. And that's the problem is with the boomers is that's an ongoing thing. It's not going to just go away because we've still got those who are in the workforce now. They're still going to be leaving probably for the next decade. We're going to be looking at a situation where more people are leaving the workforce than entering the workforce. So that's one of those things that we need to sort of deal with. Now, I kind of jokingly said we need to really get our robot workforce on the move. And that may be true. But, now Mr. Red Taco, good to see you, Mr. Red Taco. He says, okay, now that's funny. What is wrong with people? Now, I think you said that just as I was mentioning about the having 10 kids. Now, that's a lot of work. Like, here's the thing, Russia. If you, and maybe the only person here who could actually answer this, if they're here, I don't know if he's here or not, but Nate Polmateer has 10 kids, so he would know how much work it is to raise 10 kids. So I don't know if $16,500 is enough of an incentive. And yes, good afternoon, Mr. Red Taco. And now I was waiting for this. So Jordan is like, I call it soldier breeding incentive. The fact they said if your child dies in war, you're good says that to me. Yeah, absolutely. Obviously, they need to have people to draw from especially if they're thinking about having a lot more conflicts in the future. I would hope that once this Ukraine thing gets resolved, that, maybe Russia can sort of sit back for a while and not invade anybody else. That's what I would like to see. So, but it is true. When I looked at the whole thing, when I first saw it, that was what went through my mind first, Jordan, is that the whole soldier breeding thing. I don't think I actually called it soldier breeding, but the general idea that, they need more soldiers. But I think it makes a lot of sense because when you look at the population of the world right now in first world countries, to maintain your population, you need to have a birth rate of 2.1. So every family needs on average 2.1 children to basically just to maintain your population. And I believe the last time we looked, we were at about 1.7. So we're at a point where our population is going down. Now, the third world, though, they're making up for it, and immigration is helping us at least bring some of these people in. But it's one of these situations that we have to really start looking at creating some strategies to deal with what's happening with these baby boomers leaving the workforce. And this is the funny thing. This is not a brand new problem. This is something, even when I was a kid in school, they used to talk about it, that there'll be a day when the boomers, leave all these jobs and we won't know how to fill them. And that's what's happening now. We've got a lot of people leaving. We talk a lot about things like the Great Resignation, the Great Reshuffle, but those are just parts of what's going on, and they're kind of masking the real issue with some of the baby boomers. And also keep in mind too, the people who were killed in the pandemic, most of them were elderly people. So the part of the workforce that probably got hit the worst is some of the boomer side of that workforce. I mean, there were young people that died as well, but it's just one of those things that we kind of have to keep this all in mind, that we've run into this situation where it's just very interesting because we've seen it coming, but nobody's really paid attention to it. And now that we're in it, you kind of have to, pop. I was going to say water almost took a spill. Now that we're in it, you kind of have to figure something out and get something done, because we're at that situation where, it's not going away. So, but here's the beautiful thing, and I kind of touched on this in the video as well. We all know a recession is coming, but because we won't get as bad of unemployment as what we should, just because basically the unemployment is just going to eat up, initially it's going to eat up the empty jobs that nobody's in. So that could help actually mitigate that recession a little bit. It means that when we do get a recession, it may not be as bad as some of the worst recessions that we've had. In fact, it may be a mild recession, and it also may not go as long as we think. And that there is absolutely fantastic, because I don't know about you guys. I want some greener pastures. I like making money. Although I will say, just last week, the other day, I was looking to make some money with some day trading, and the market was just a little bit too green. And I was just like, I kind of hope we get some bad news today, so the market will sink a bit, because I can make money really fast when the market's sinking. But that's just a funny thing. Now, Jordan says, I do understand the boomer ideal. However, if you look at the history of Russian military, they've always been able to boast big numbers. With boomers leaving, they need to regain military personnel. Yeah, well, that's one aspect of it as well. Yeah, so military, and I mean, military also won't work if you don't have the civilian people in place and all of the infrastructure. Even if you look at manufacturing, it's regular folks in manufacturing that are making the military's weapons, their vehicles, all of that, even their clothes. So you kind of need to have it anyway. So in the end, to me, anyhow, it's a soldier breed. Okay. Jordan needs to write a book. I think it would be an interesting book about soldier breeding. Okay. And I agree there. Oh, that you need to write a book? But anyway, that's just kind of the whole thing with the boomers, with the recession, with the way the numbers are all pulling together. So that's kind of cool. All right, so we've reached the end of the new content. So if you guys got questions you want to throw, feel free to do that. While you guys are coming up with your questions, I'm going to throw out what we're going to do for this week. So Monday's video, I had a request to look at some all equity ETFs. So that's what we're doing for tomorrow. And we got a video on all equity ETFs. And then another request. I've done a lot of canoe videos over the year, But somebody's like, I want you to revisit it again. I want to know how Canoe is doing with, with the drop in prices of oil, and, are they going to survive? Do I need to worry about Canoe? So I'm going to do another Canoe video for Thursday. Next Saturday, we'll have another commentary style video, and then we'll be back here again on Sunday, and we'll do this all over again. And the friggin' Oracle says banana bread muffins live stream making. You have a camera girl to help. All right. Let's talk a little bit about me and cooking. So when I like to cook, I call it cooking. The fire department calls it a 5-alarm fire. So it's just one of these things. It's like, I told my roommate once to take out the garbage, and she was like, no, you cooked it. So that's kind of my cooking. It's like, if I had a dog, it would be begging for Alka-Seltzer. It just wouldn't be good. So me and cooking, not good. So a live stream, if I did it as, if I did a live cooking stream, that would just be, sure, that's not cooking, that's baking. Trust me, it would be a disaster. It would be probably very humorous to watch. And plus I would have, well, right now I would have like, 16 to 20 or so of you to call 911 on my behalf because of all of the fire. So yeah, you don't want me cooking. And welcome, Vic. You made it in. We're in the end part, but hey, that is fantastic. Which part of BC do you live in? I live in the Ottawa part of BC. But when I say that, I have lived in BC before. I've lived in Kelowna. I've also lived in Vancouver. So I have a lot of familiarity with BC. I love BC. BC is really expensive, but insanely beautiful. But right now I currently live in the capital city. I don't see the city very much as my studio is underground in a basement. So I don't even have a window in my studio. So it's funny. Sometimes I will come upstairs and discover what the weather is. My mother asked me the other morning. She says, whoa, what's the weather like there today? And I was like, I don't know. Let me check the weather network. So that's kind of interesting. Come on. Oh, great content, huh? Yeah, that would be funny content. Well, just to put this in perspective, though, I am, I'm about to move into the 900s. So when I get to that 1,000 subscriber mark, and so any of you guys who haven't subscribed who are here, just do that right now, so we can get myself closer. I am going to do that drinking stream. I promised a drinking stream, and it'll be funny because when I drink, I'm a silly drinker, so I get sillier and sillier and sillier as I drink. So there'll probably be a stream where I'll probably be giggling the entire time. I'll probably be telling jokes that make absolutely no sense. I'm not going to bake. Not going to bake and drink at the same time. Trust me, Mr. Oracle. He's probably going to continue working on me. I bet you if I said I would bake and drink, Ken would be like, you go buy 100 phones and then make 100 YouTube accounts just to get me there so that you could see that. Don't do that, people. I'm just saying. So that's going to be a fantastic stream. I'm actually very much looking forward to that. And it's not all about getting this monetized. It's more or less just that as a YouTuber, once you cross over 1,000, you no longer are concerned. I mean, you still want subs and you're still going to say, please subscribe, blah, blah, blah. But it's not as big of a focus. So you get to sort of relax a little bit on that part. But to me, it's always been about content, right? Focus on the content, focus on trying to improve it, focus on trying to get the stream, well, not just the stream, but, of course the stream as well. Try to work on that. work on the videos, making sure people are getting what they like. And that's one of those cool things. And I guess in my case too, I really like, I love that this community has no problems asking me for what they want when it comes to videos. And that's fantastic as well. So keep in mind, I don't think I've ever not done a request as far as I know. If I haven't, it's probably because somebody threw it at me and I absolutely missed it. But I always try to do requests. Because to me this is like a relationship. It's an interaction between me and you guys, and we're all a community. I just happen to be the one that I just chair these little meetings that we have, so to say. So what you guys want, that's what I'm gonna give you, because that's just the way it is. Come on, right in my heart. And Vic says, I like your investing approach, mature and sensible. Yeah. Well, it comes with experience, right? Like there's a lot of investors on YouTube, let's be honest. And, there's a lot of, there's a lot of really young ones who are young and flashy and, really good to look at, but they just don't have that experience. Sometimes they still have a lot to learn. They have a lot to experience before they're going to get really good. They may be knowledgeable on what they're reading, but sometimes you have to have, that chance to have been through life a little bit. And that's why I think this is probably the only niche in, well, maybe not the only, but this is definitely one of the niches in YouTube where I think being a little bit older actually is an advantage. It gives you a better perspective on the overall things. So that is kind of cool. First home savings account, Trudeau. Yeah, absolutely. As soon as we know this is gonna, whoa, look at that. Well, you guys couldn't see what I saw. My mouse got really big all of a sudden. So yeah, as soon as Trudeau passes the first home savings account, I will absolutely do a video on that for you, Vic. And hello, Sophie. Welcome to the stream. It's always good to see a Sophie in the stream. I think you're the only Sophie in the community, so you got kind of a monopoly on the Sophie-ness. Does heartache count as experience? Yeah, absolutely. Absolutely. I mean, here's the thing. And I usually say this in job interviews as well. When somebody says to me about how do you deal with mistakes, I'll usually I'll usually say this. I love mistakes, because when I make a mistake, it's not a negative thing. It's actually positive, because it's a chance for me to learn and become better as a human being or as an employee. And the next time I can make a brand spanking new mistake and learn from that too. And that's kind of that whole thing. So, Vince has been dumped a lot. Vince, you know why? Or Vince, Vic, you know why you've been dumped a lot? Because you just haven't found the right person yet. Be persistent. Just keep your chin up. The right person will come along at some point. And the Oracle show in an hour. So apparently an hour from now we're going to have an Oracle show. So the friggin' Oracle, that's all you have to do is if you look up the friggin' Oracle on YouTube, he does have a show. His show is more adult than my show. I say that only because, just the content is just a little bit more of an A rating, opposed to, I like to think that this is a G rating. Well, I would say, maybe halfway between G and A, only because I think that, kids probably don't care a lot about stocks unless you're one of the few. It's not me, I'm told, it's them. Well, I'll be honest, Vic. It's probably both you and them. And what I mean by that is that when it comes to relationships, you kind of just have to be patient. And sometimes if you have been in a situation where you've been getting dumped a lot, or, you just haven't been fulfilled with it, sometimes you can make impatient moves. And those impatient moves can sometimes get you involved in situations that are going to basically follow the same pattern. So you want to kind of not follow that pattern. And some of the way to do that is to just, I hate to say this, but you almost need to do your due diligence when it comes to, is this person somebody who I am compatible with? Because sometimes somebody may look nice, but if their personality is absolutely banana bread awful, well, you're not going to probably succeed. You're probably, because looks go away. In the end, when we're all like, 70, 80 years old, we're all going to be a little bit wrinkly and, a little bit pruny and all of that fun stuff. So that's what I just say. I probably shouldn't be giving relationship advice on my channel, but hey, you know what? For you guys, I'll give anything. It's just a situation that, you just want to try to find somebody you can relate to. Sometimes it's best to see if you can be compatible on a friendship level with somebody first. Because if you can be compatible on a friendship level and then there is a spark, you may be onto something with that. So, and always keep your head held high. When when you do have a breakup, look at what you did, look at what they did, and maybe there's something to be learned in there. Maybe there is a lesson, and if there is, then definitely learn it, because then perhaps next time it will help you in that whole relationship thing. So, let's see. You should be a therapist and charge $200 an hour. I would never charge $200 an hour. I would charge $197 an hour. They often say my habits turn them off, like saying banana bread too much. You know what? If anybody is not going to be with you because you say banana bread too much, well, they're just not worth it. Trust me on this. It's absolutely not worth it. Vic needs to bring this to my show and come on and we'll discuss it. There you go. If you want Vic to get some advice from the friggin' Oracle, then definitely come over and check. And Vic says, I love Rye, Candace, and Scott. Create, save, invest. Yeah, Scott is awesome. Now, Scott does live streams too. So I've never yet been able to show up on his live stream. I've just always catch them after the fact. But yeah, and he will be watching. I know Scott will actually watch this probably tonight or tomorrow, and he will see this, Vic. And I've seen you in his comments. So Scott is awesome. I do like Scott a lot. All right. Do we have any further questions? We're a couple minutes past where I normally end it. But, if you guys got questions, I can stick around for a few more minutes. That's not a big issue for me. Oh, he's going to test the Oracle. Let me test the Oracle. What will the market do tomorrow? All right. Well, the only problem with the Oracle is he's more of a crypto Oracle. I will give you an idea. I think at the very least, we're going to start off on a red. We're sort of going to carry on with a little bit of that crash that was happening on Friday. And I'll verify that. Like what I'll do is I'll actually look at the futures in the morning and see how badly the futures are in the red. If the futures are deeply in the red, then you're probably looking at a nice big drop initially in the morning. And that's, to me, that will sort of determine what I'm going to do with my day trading. So I always pay attention to the futures. They're not always 100% right, but most of the time they give you a very good indication of what's going on. You can also look at like the Monday market opens up early for Europe and for China, then Europe. So you can always look at the Asian markets, the European markets, and if they're absolutely tanking, when our market opens, and plus you got red futures, you can almost guarantee that we're looking for a red morning at the very least, maybe even a full red day. But I'm I'm going to predict tomorrow to be a red day. Anyway. But when all three of my kids were born, I never once seen the stork when they were delivered. Ape will just swing along. There we go. Everybody's asking about Ape. Glad to have made it. Thank you. Hope you recovered from C19. I'll tell you. Excuse me. I'm almost recovered from COVID. Every so often I feel like I'm recovered, and then the cough keeps coming back. It just keeps coming back. And like this week, I've had a little bit of the cough. Like I can feel it in the back of my throat right now. But hopefully very, very soon, it's at least not congesting me as bad as it was. So it's one of these things like, yeah, COVID is one of those things that I don't wish it on anybody. It was not a fun trip. But, I will, I'll just be glad that I'm one of the people that survived it so far. Excuse me. Oh, dear. So, anyway, I did survive COVID. All right. So, everybody, thank you very much for being out here today. I hope you guys all have a fantastic evening. I know those of you in Ontario, you may not be able to barbecue tonight with the showers, but those of you on the West Coast, spark up those barbecues, have a steak, have a hamburger, have a fantastic evening. And we'll be back again tomorrow with our video. And we'll be back here again next week to do this all over again. I can't wait. You guys are the best community on YouTube, and I really mean that. So take care, everybody, and I will see you again next week on this